Good morning, everyone. Welcome to today's webinar on what is mileage equalization. My name is Kristen L, and I'll be moderating today's webinar. Your presenters today are Iris Balmaceda and Denora Guzman. Iris is the supervisor of information here at Ultratech. She worked in the car accounting department for 7 years, and now she's managing Ultratech's information services team. Denora Guzman, she is the director of car accounting here at Ultratech. She heads up the car accounting group out of the Houston office and has been in the rail industry for 20 years and 18 with all transfer. All right, so before we get started, here's a bit of housekeeping. The webinar will be approximately 40 minutes long to allow for 20 minutes of Q&A. During the webinar, if you do have a question, you can type it into the Q&A section on the side panel. We will address all questions at the end of the webinar. Without further ado, Iris and Denora, please take it away.
Good morning, everyone. Today we will be talking about mileage equalization, a topic that may be familiar to some of you. The purpose of this presentation is to help introduce the concepts revolving what makes up a penalty and some insight as to how to best avoid these penalties. But before I jump into our topic today, I did want to provide a quick overview as to who Alltranstech is in the industry for those of you that may be joining us for the first time this year. Alltranstech services over 275,000 rail cars. Our main services include railcar fleet management, engineering, regulatory compliance support, railcar inspection, non-destructive testing support, welding and special processes support, hazmat services, and technical training and education. And as you can see there off to the side, the majority of the car types under contract are covered hoppers and tank cars, as well as other types. Tying back to today's topic, we will be concentrating on tank cars and hopper cars, mainly because U.S. equalization is only charged to tank cars, and Canadian equalization is charged to both tank and hopper cars. As they say, a penny saved is a penny earned. Alltranstech is very well known in the industry, not only for saving our customers millions of dollars every year, but also for being the first ones who started the equalization auditing process back in the early 2000s. First, we will begin with the four major players in the equalization process, the first of which are the railroads. It ultimately starts and ends with the railroads. The role of the railroads is to report the loaded and empty miles of trips made by rail cars, as well as adjust mileage after claims are made by Alltranstech. RailLink is the clearinghouse. They collect the car hire records from the railroads and distribute the data to the owner of the mark or agent, such as Alltranstech. As mentioned, they use the railroad's car hire data in order to determine whether the owner of the mark will incur equalization charges. Next, we have the lessors. The lessors receive the data from RailLink for all of their rail cars. From there, they filter the records by the lessee, compile the equalization invoices in order to ultimately issue to the clients and or their agents. Lastly, we have the major player in this case, which is Alltranstech. And the reason for that is because we have the time and expertise to review every trip made by the railroads for every single rail car. In doing so, we are able to detect the discrepancies made, which otherwise may go unnoticed. So some of the things we do is we collect and store the monthly car hire data from RailLink and the lessors. We estimate equalization penalties and provide monthly reports based on data provided by RailLink and the lessors. We audit all the records on behalf of our customers. We also file the claims on behalf of our customers, and then ultimately we verify and dispute, if needed, the mileage equalization invoices received. So this goes back to full circle to the railroads, who could ultimately adjust their miles charged, resulting in savings for our customers. All information regarding equalization can be found in Tariff 6007-0, which is found on the RailLink website under their National Tariffs section under Resources. The tariff is issued and revised every year by RailLink, most likely with the cooperation of the AAR, or the Association of American Railroads. This tariff explains the rules regarding the equalization computations, starting with item 187 and forward. Some of the items are open to interpretation, so we recommend that when not sure, to call or email RailLink for clarification. So to backtrack a bit, the majority of the railroads that participate in equalization are all of the Class 1 railroads. Those 7 railroads are BNSF, CN, CPRS, CSXT, KCS, NS, and UP. All participate in the U.S. equalization system, but CN and CPRS also participate in Canadian equalization, which is for tank cars and hopper cars. The railroads decided on the equalization method in order to motivate the shippers to be mindful on how their cars are traveling and to give them an incentive. So what is the incentive for shippers? Railroads provide an incentive to shippers to move revenue-generating shipments, which are loaded cars, but since empty freight car movements do not generate revenue, railroads limit empty moves by way of tariffs. The loaded miles act as a credit against the empty miles a car travels, which can result in a free ride. It's important to note that mileage on empty cars moving on revenue billing will not be included in the equalization account. It is extremely important that the shippers maintain records of all the empty freight that they have paid during the year. These records should include the car ID, name of railroad, date, amounts, origin and destination, and waybill number. Otherwise, they will run the risk of getting double dipped. We'll show an example of double dipping towards the end of the presentation. So what prompts a penalty? Free rides have limits. This free empty movement must be less than the 106% of the original loaded shipment distance. If the empty mileage movement exceeds this 106% threshold, the railroads will charge penalties. Again, the railroads implemented the equalization method in an effort to reduce empty miles traveled by all rail cars. Here you can see we broke out a decision tree based off empty freight moves versus equalization. Ultimately, it should end with one charge or the other. This is where our experts would advise that when moving your rail cars, you should be mindful of the method being used to better anticipate the charge. An example of this is if a car must be sent to a shop, it could be sent right after a loaded move, since it could potentially be covered by the free empty move. However, if that's unavoidable, it could be expected that an empty freight charge will be made. And if it does resort to paying an empty freight charge, we advise again that you keep records of these charges, as this helps in providing proof of payments already made so that when conducting an audit, the miles could be quickly refuted and the shipper avoids the double dipping of these charges. If your cars are only moving in the US, you won't have to worry about any type of cars except for tank cars. But if your rail cars are also moving in Canada, railroad CN and CPRS bill equalization for both hopper cars and tank cars. So please be mindful of that as well. US equalization is billed by RailLink to the owner of the mark, but Canadian equalization is billed directly by the CN and CPRS, also to the owner of the mark. Mexico is not shown above because there are no equalization penalties imposed in Mexico. And as you can see, in the US, there is a $1.01 rate for the 2022 period. And then in Canada, it's $1.10 for both CN and CPRS. Equalization penalties are billed at the mark level, not the car level, and per calendar year. Here's the formula that RailLink, thus the lessors as well, use to compute equalization penalties. Here we took the loaded miles traveled from January to December for a specific mark and multiplied it times 1.06. That's that second line there. And then took the result and subtracted it from the total empty miles traveled in the same time period, which is the first row. If the difference is negative or zero, then congratulations, you have no penalties. However, if the number is positive, you would then have to multiply that times $1.01 as an example, which is the rate for the US in 2022. And the product of that will be your penalty. Also, take into consideration that if you end up with negative miles, they don't carry over. So you either have no penalties due or a penalty, but RailLink won't credit negative penalties the following year. Next, I'll be diving in a bit deeper into mileage credits and how exactly we prepare to conduct our audit at Alltranstech. We will first start with car hire records, or commonly known in the industry as mileage credits. So a mileage credit record is an accounting record generated by railroads to report mileage activity. One record is generated for each move on one railroad in 1 month. These are the records that are reported by the railroads to RailLink on a monthly basis for owned and leased cars. This is what we audit when a customer signs up for equalization. So as you can see here, some of the important columns that mileage credit records contain are the car ID number, the railroad, the earned and allowed date, the loaded and empty miles, the movement information, and the equalization status type. So what you see here is how RailLink sends their data in the 500 byte file. As you can see, it's not very user-friendly. We store this monthly data in our database for all of our customers. If the customer owns the rail cars, the data comes directly from RailLink. If the customer leases cars, the data will come from the lessor, usually in the same format. This is how the same data looks once it's been loaded into our FleetWatch equalization system. As you can see now, it's a bit more user-friendly. You can read the city names along with the number of loaded and empty miles. And also you can differentiate the US and Canadian miles. Specifically, we do that by looking under the MS column there, which is the mileage settlement code. Any codes containing digits are US miles, and any codes containing letters are Canadian miles. Our auditors look at each trip made by the railroads in this system, and this is where they label each claim. Depending on how large the fleets are, we review thousands of records individually. As you can imagine, this takes months to audit the process from beginning to end. So a common question we get is, why use mileage credits and not CLM data? Here are the main reasons. Mileage credits are unique, valuable, useful, and irrefutable. This is what RailLink uses for their computations. So naturally, it cannot be refuted by railroad as easily because the data is generated by those same railroads. Here we see the 4 key players once again, but with further detail on how they use mileage credit record. Railroads report the mileage subject to equalization to the proper RailLink account. They have internal codes that they use to identify which records are subject to equalization and which are not. RailLink then takes all those records and starts computing the records by calendar year, starting with January all the way through December. They provide the mark owner a monthly equalization statement. They also pass those records through a file called the CHOP file, which includes all records reported through the car hire data exchange. For those who are not familiar with the CHOP file, this is the file that's in a 500 byte format as shown in the previous slide. The lessor collects their mileage credits from RailLink. They then filter those records and pass them either directly to the customer or to their agent, such as Alltranstech. And then lastly, Alltranstech collects and houses all the data received on a monthly basis, and then loads all the records into our system, the FleetWatch EQ system, This is where the auditors can review the miles reported for the loaded trips and empty trips per railroad, as shown in the previous slide. They're able to read the city names as opposed to the split codes, and they're able to see whether the empty mileage reported is exempted from the equalization computations. So what does all Transtech report during the equalization process? We start by reporting what we call a mileage reporting error, which is an equalization error in which the empty miles exceed the loaded miles reported by the railroad by at least 50 miles. From there, we differentiate those that are fileable, but we also label the unfileable claims. So the fileable errors consist of errors that are filed against the railroads in which the railroad is expected to adjust, and I'll show a few examples of that. And then the non-fileable errors are a type of error in which it's not filed against the railroad, but it is labeled for informational purposes to the shipper. So these are the most common examples of fileable claims. Circuitous routing of empty moves is the first one there. It sometimes is usually not allowed by some railroads since the extra empty miles are due to convenience and they are protected by Tariff 6007, but we make them fileable because some railroads do allow them. Again, sometimes it's just a matter of interpretation by the railroads. Next, we have empty mileage payment errors, which means that the number of empty miles exceeds the loaded miles substantially for the same trip. Another time we use this reporting error is when the mileage reported is the empty mileage reported is a lot higher than what the railroads show in the PC miler calculator. And I'll show an example of that in a bit. Loaded mileage payment errors is when the railroads report the empty miles only, but not the loaded miles, or just not enough loaded miles for a trip. Revenue move freight paid is when the railroad pays empty freight, yet the empty miles are not exempted and still included in the equalization calculations. And then movements to shop for regulatory reasons or compliance reasons. As a note, some railroads don't allow these type of claims either, but some do, so we still report them. And lastly, we have two types of reporting errors that have to do with border crossings. Cars may cross in and out of Canada through cities, which may cause excessive empty miles in the US or vice versa. So here on the screen, we have an example of an empty mileage payment error. Diving a bit deeper, here's an example of what the error looks like in our system. In this example, you can see that the car traveled loaded from Louisiana to Bakersfield. We can see that within the first three rows there. And then it goes back for some reason from Bakersfield to Arden, North Carolina. The railroad reported about 4,700 empty miles, even though after researching, there are only 305 miles. So that's how we mark the 305 in the correct box, and we mark this as an empty mileage payment error there. This error alone would cause our customer over $4,000 worth of penalties. Here we see an example of a loaded mileage payment error. You can see that the 655 empty miles were reported per that second row there. But although it looks like they reported 648 loaded miles, the MS type, which is the mileage settlement code, is not taking these loaded miles into account. We know this because the number 2 under that MS type column means that the records are included in the EQ computations, but the number 4 right above that means that the records are exempted. For that reason, this customer ended up with excessive empty miles compared to the loaded miles. This year, we saw that this was one of the biggest issues with one of the Class 1 railroads. They exempted the loaded miles from equalization, but not the empty miles. We filed thousands of dollars worth of claims because of this error. In this example, the customer paid empty freight to move the car from Charleston, Tennessee to Hearne, Texas. but the railroads included the empty miles in the equalization computation anyways, and they shouldn't have. We know that the customer paid freight due to them providing us with the details under that event type section there in the middle of the screen. We provided those details with our claim to further back up these empties these empty miles that should be excluded from the penalty. This is the example of double dipping I was referring to earlier. Next, we have our most common non-fileable errors. These include repositioning of cars, movements to shop for non-regulatory reasons, movements to storage, in and out of service, and circuitous routing using different railroads and junctions. Again, these are movements that cause excess in equalization, but are not due to the railroad's doing, but due to the shipper's instructions. These can also be valuable as well when being proactive in avoiding future equalization charges. We understand that routing to a shop, cleaning facility, or storage can cause empty mileage to accumulate as seen per the previous slide. Car owners may also incur mileage penalties if railroads decide to use different routes to return the car. I would also like to note that tank cars are the ones that usually accumulate excess empty miles due to the lack of backhaul commodity service opportunities and due to more frequent need for repair and cleaning sites. So once we file the claims, we follow up with the railroads to make sure they submit their adjustments before the deadline. They can either send the adjustments in the monthly car hire tape, or they can submit a form called ER1 directly to RailLink. Here's an example of an ER1 that we received from the CN. They adjusted over 1.2 million miles as seen here. And no, it's not a typo. They adjusted over 1.2 million empty miles on behalf of our customer for their owned mark. Once we receive the ER1 from the railroad or RailLink, if it's for a leased mark, we enter it in our system, post it, and generate a report at the car ID level. Since the ER1s they send us are at the mark level, we have to generate the report at the car level, otherwise the lessor wouldn't know who to apply the adjustment to. Here's an example of an ER1 submitted by the BNSF for the TILX mark. They allowed almost 350,000 empty miles, as highlighted there on the screen, on behalf of our customer. As you can see on the ER1, they don't break it down at the car level, so we have to make sure to do that before we send it to Trinity Industries to make sure that these adjustments are applied to our customers' cars. Now, this is an example where our other customers can benefit from the savings. If the customer only had a $200,000 charge worth of equalization penalties and the railroad adjusts close to 350,000 miles, the difference is applied to the rest of our customers, so everyone could benefit from the audit. Here you can see what I was referring to as an advantage of signing up for an audit. The shipper may receive a fleet benefit factor for using the lessee's cars, and the rate is typically agreed upon during lease contract negotiation. Due to the sheer volume of one party doing equalization for several clients, All Transdeck helps the lessor to also reap benefits by seeing a significantly lower penalty passed on to them due to penalties being minimized for the rail mark. What's great is that they often pass along the savings to their customers through something called a fleet benefit factor. The percentage is based on the size of the fleet and is up to the lessor's discretion. As you can see here, this lessor passed along a fleet benefit discount of 17%, which translated to about $4,800. So there are 2 audits done per year. In November, we conduct an audit for January through June of the previous year. And in March, we conduct the audit for the rest of the year from June to December. It's important to know we received the owned records 2 months after the facts and lease car records 3 months after the facts. So to review what we've discussed so far, mileage credit records set the stage for the annual equalization process to determine if a rail car accumulates more empty miles versus loaded miles, resulting in a penalty. Our auditors will review each individual trip made by the rail cars. If the railroad makes a mistake in the number of miles reported, the result is a claim. If the railroads include the mileage made by a freight revenue empty trip, the result is also a claim. So as soon as the data has been loaded into our FleetWatch equalization program, the process begins. The first step here is to analyze the car hire data exchange records and make the claims as needed. From there, we file the claims against the railroads and follow up to make sure the claims are worked before the deadline. And then once the railroads adjust the mileage, we ensure that the lessors and sublessors adjust their equalization figures. And lastly, we verify the equalization invoices for accuracy or dispute if needed. We make sure to file all the claims weeks before the deadline of May 20th to give the railroads enough time to work the claims and submit their adjustments. We also ensure that the lessors receive all the adjustments and a breakdown of the cars being adjusted. We will verify and dispute, if needed, all the invoices received after the audit, as mentioned. So if you've noticed that your company is paying outrageously high equalization bills, you might be happy to see the payoff of getting an audit done. Performing a mileage equalization audit on an annual basis can rectify discrepancies in mileage reports and result in substantial savings. Here on the screen is an example of actual numbers of our customers that benefited from the 2021 equalization year. For confidentiality purposes, of course, we'll call them customers A, B, C, and D. Customer A was expecting about $2.5 million worth in equalization penalties. But after we did an audit for them, they paid about $1 million, resulting in savings of about $1.5 million. Customer B was expecting $2 million. After the audit, they paid about $163,000, resulting in savings of about $1.7 million. Customer C was expecting about $1.6 million. After the audit, they paid close to $335,000, resulting in savings of about $1.2 million. And lastly, customer D was expecting $530,000 worth of equalization penalties, and after the audit, they paid $0, resulting in savings of more than $500,000. As you can see, it can pay off to have a second look at your mileage records. In conclusion, here are a few tips to help minimize your penalties or potential penalties. We recommend that you monitor your car movements, especially if you do a lot of repositioning between plants. We also recommend to pick shops that are closer to your plants and routes if possible. And lastly, we recommend to make sure to keep records of any empty freight payments made to the railroads, including the car ID, the name of the railroad, the date, and the amount paid. This could result in substantial savings for your company. Thank you so much for your time, and please make sure, even if you don't come to us, get someone to review your records. And if you have any questions or would like us to provide you with a quote, do not hesitate to contact us.
Thank you, Iris. Great presentation. So now we will handle the incoming questions. First question. A revenue move should not be included in mileage equalization?
Hi, Chris. This is Dinora. I'm here for the Q&A section. That is correct. If the customer is paying empty freight, then the railroads should not include those empty miles in the computation, because that's what we call double dipping. So if they're already paying empty freight, then there's no reason to include those in the computations.
Great. Next one. Why is there no mileage equalizations on hoppers in the U.S.? Why the difference between Canada and the USA?
I think on one of these slides, Iris talked a little bit about tank cars and the needing the I guess the tank cars are needed to be cleaned more often. There's more repairs. There's other things involved with the tank cars that are not with the hopper cars. And I think for that reason, the AAR and RailLink and the committee decided to just charge equalization on tank cars in the U.S., which is, by the way, in Canada is not the case. They actually do include both the cover hoppers and the tank cars in their computations.
Next question. If you're able to disclose, how much money did you save your customers last year?
Okay, so we're very proud to say that it's been one of our best years. So in total, all the customers combined had a total of $13 million worth of penalties, and we were able to save them about $11.5 million. So, yeah, that's pretty much, it shows that it pays off, to do an audit.
Yeah, it's very substantial. Next question. Also, I know you mentioned double dipping of the empty freight payments. Is that a very common occurrence for the railroads to still penalize for those miles, even if a customer has already paid them empty freight?
Yes, Chris. Unfortunately, that's it's sad to say, but yeah, we see that a lot. So it is very helpful, again, to keep records of all those empty freight payments, because we do see it a lot. We sometimes even see cases in which the railroads deny our claims, even though we show them proof of empty freight. So we had to kind of dispute it and go back and forth, and then finally we come to an agreement. But yes, to answer your question, we see it a lot.
Thank you. Next question. Can you please explain circuitous miles again? Also, why would railroads reject a dispute with circuitous miles? An example, loaded move per PC miler was 1,200 miles, and empty miles should be the same, but railroads state that the trip is 1,400 miles. And I can repeat that if you need me to.
No, I understand. I completely understand, because it's been asked before, by the customers. So the reason for that, rail cars are different. Obviously the train and rail cars are different than like a car. Sometimes they have to take a different route due to their own convenience. So if, let's say, they go from city A to B and there's 100 miles, and then back from B to A, they might take a small detour or something due to their convenience. And they are protected, by the way. So under tariff one, the one that Iris showed, under that tariff, they are protected. So there's an item there under 187 that it shows, that the railroad are protected due to convenience. So the only thing though, sometimes we feel like they abuse it a little bit, because we see loaded miles maybe at 500 miles, and then we see the empties close to 1,000 miles. So that's almost double. So we don't consider that to be convenience. We consider that to be more like an empty mileage payment error. Okay, but yes, to answer your question, that's the reason they are protected. That's the type of error that is due to their own convenience, and they are protected by the tariff when it comes to that one.
Thank you. I see a couple more questions here, and if you have more, please keep them coming. How far back could you do an EQ audit?
So as far as that, we can go back to 3 years. So RailLink will take adjustments up until 3 years. But saying that, it doesn't mean that the customer is going to get their money back. So for example, let's say customer A paid, I don't know, $500,000 worth of penalties in 2021. In 2023, we can still do an audit. Okay, but the only thing is that the disadvantage of that is that whatever adjustment the railroads make, they will be applied to the 2023 year. So they don't apply it to the 2021. Okay, so pretty much they end up with a big credit. So if they're going to have any penalties in 2023, it is very helpful to do that 2021 audit because it will minimize the penalties for 2023. So to answer the question, 3 years, but they will just give them a credit. They're not going to go back and take away whatever payments they have already made to the lessor or to RailLink.
Thank you. Got one more here. I may have missed it, but can a rail car have both U.S. and Canadian equalization penalties, or is it usually one or the other?
Oh, definitely. If the customer's cars are moving in the U.S. and Canada, it's very common. So pretty much, Iris explained that one of the errors that we find is that whenever the car is going from one plant, let's say in Canada, and it crosses the border into the US, and then it goes back to the same plant in Canada, sometimes what they do, they use a different border crossing to go back to the same place. And by using a different border crossing, that accumulates extra empty penalties in either side, sometimes in the Canadian side, and sometimes in the US side, and sometimes in both. So yeah, definitely there could be equalization in both, in Canada and the US for the same car.
Thank you. Janora, we have one last question that just came in. Could you coordinate with RailLink / lessors on the collection of the data?
So the way it works, if you are a new customer to All Transtech, we take care of everything. So all you need to worry about is signing the contract, okay, once we come to an agreement. And then what we can do, we sign you up with RailLink, and then we send a letter to the leasing companies. And then all you have to do is approve the release of the data. Some of the leasing companies, I believe Union Tank, probably SMBC, Wells Fargo Rail, they have an agreement where all parties have to sign. But once your company signs and we sign and the leasing company signs, you're good to go. So they will release the data to us in a monthly basis for your lease cars, and then RailLink will release the monthly data for your own cars if you have any. We collect it, we house it, and then towards the end, when we're getting close to the end of the year, we'll let you know if you have a penalty. So we'll provide you with reports based on the data that we receive. And if we see that your equalization penalty is growing, we'll talk to you and we'll let you know if you need an audit. So, and if you do, we'll provide you with a quote, and you don't have to do anything. That's pretty much it. Just, let us know that you want to do the audit. We'll do everything else. We'll review everything. I think Iris did a great job explaining how we load all the data. We review all the data. We file the claims. We follow up with the railroads. Which is the tough part because sometimes the railroads won't, they won't work the audits on time. So we have to continuously follow up with them. Sometimes there's been times where we flew and met with them in person just to make sure that they're doing, that they're cooperating with us. And most of the times they're really good, but it takes a lot of pushing because they have a lot of work to do too at the end of the equalization year. But anyway, I don't know if I said more than what was asked, but yeah, shippers shouldn't have to do anything other than sign and then leave everything else to us.
Thank you. We got another one that just came in. What is the easiest way to ascertain who the mileage equalization contact is for the railroads? Is that through RailLink?
I'm sorry, repeat that again, Chris?
Sorry, what is the easiest way to ascertain who the mileage equalization contact is for the railroads? Is that through RailLink?
Yeah, we can do it through RailLink. They will provide that information for you. And a lot of the times, we're very familiar with all the railroads, so we know all the contact information. So if anybody, needs help with that, we can provide that for you. But yeah, the RailLink has that information, and we have some of it too.
We got another one that has come in, Denora. Have there been any findings where your clients avoided paying tariff charges for empty moves, but the equalization charges were valid, related to double dip?
Yeah, we found instances in which the customer is paying double, so they're paying empty freight, but the mileage is also included in the computations. So what happens sometimes, we lower the, we're able to claim that to the railroad, prove it to them, and the equalization penalty lowers. So sometimes we're not able to wipe out the entire penalty, but you know, they'll once you prove it to them that the customer has paid the empty freight, the railroads will definitely fix that.
Great, thank you. Another one, and keep them coming if you have them. Are the railroads protected when they misroute rail cars or take significant detours due to weather events?
Due to weather events?
Yes, due to weather events.
Yes. Yes, they are protected because you have to remember, so even though the tariff is subject to interpretation, there's a lot of things that are not, I mean, you know, it's not under their control. So pretty much if something happens, there's a derailment or there's something related to the weather, that's taken into consideration. So, and if the customer feels that they need to fight it or they feel like because of that, you know, they were charged more or, you know, they can still take it to RailLink. RailLink will review it. They have a committee, RailLink does, to where if you don't agree with something, you can always, you know, reach out to them and they'll reach out to their committee and they'll make a decision.
Thank you, Denora. We've got another question that came in. Two questions. I'll answer the first half. First, they said they appreciate the presentation. Great job, and I agree. Could we get a copy of the slide deck? Yeah, everyone who attended will send a PDF copy of the slide presentation too. And then the second question, and we will do that after the webinar. There'll be a follow-up email that it will be contained in. So here is the formal rules guidelines with mileage equalization contained within tariff 6007. Is there other important resources to consider?
Yes, so that's the main tariff that is provided, and if you look it up, RailLink has it, we have it if somebody wants a copy of it, but the railroads usually have their own tariff too. So I found out that some of them will quote some kind of tariff that they have, like an internal one, and the only thing that you can do when that happens, so let's say that they don't allow something that we believe should be allowed under tariff 6007, then you can email RailLink and they'll decide which one supersedes the other. So, but it's usually 6007, the one that applies to everything. If the railroads have their own, then you can dispute that and you can contact RailLink and they'll help you figure it out, like who's right and who's wrong. But yeah, there's others, but they usually railroad tariffs.
Thank you, Denora. That is the last question that I see. But please, if there's any questions, please reach out. We have a contact form on our website. In the follow-up email, we'll list the contact information for all of us on the webinar today. But thanks, everyone, for attending. Thank you, Iris and Denora, for presenting. Like I said earlier, in the follow-up email, we will include a copy of the presentation deck, as well as a brief survey on today's webinar. And we would appreciate if you take a little bit of time to fill that out. So again, thank you everyone for attending, and we hope you have a great day.